Is Darth Vader crashing the markets? What's up, everybody? Welcome aboard to Bubba's Bottom Line. And of course, this is our weekend edition of a little recap of the weekend, what's going on. And, you know, they always used to call me on air Darth Vader, and why not? And is Darth Vader collapsing these markets? And is it going to go, is it going to continue? Are we going to go much lower? And, you know, listen, we know one thing for sure, the markets never announce themselves. So certainly we don't know that for a fact, but certainly from my perspective, the market tops have put in. From my perspective, it's extremely ugly, and there's a whole bunch of reasons why that we could see a market that can continue lower. Certainly, we had last week, we saw, after not having a 3% move in the markets in 2 years, we had almost, I think it was 5 in 5 days. At least the markets moved 500 points a day, every day, and the intraday ranges were wild. I mean, I don't know if you caught the end of Friday, but the markets were getting smoked. First, they opened much higher. Then they were getting smoked. They made a rally attempt, got smoked even further. And then by the end of the day, they were running to the moon at the end with a big, what we call those rip your face off vicious rallies. And that's what we see. In the meantime, the markets look like they're in trouble. They look like they're struggling. You've got too many people out there trying to tell you now that everything's okay. And again, not that everything isn't okay, not that we're not going to rally, because what do we say here? Every time we talk about the markets, we talk about the markets go up on average 8% year over year, just not every year. But again, in the history of the market, if you had left your money in from the beginning of day one, you would have made 8% annually at least on your money. So we're certainly not calling the end of the world, but I think that there's a lot of things out there that are making no sense, and a lot of things out there that we have continued to ignore for the entire duration of this ridiculous Fed-driven imbecilic rally that has no real business of going higher. And of course, what are we talking about here? Well, first of all, let's look at it from the big picture. The markets do rally. And of course, the big sell-off that we had, you know, back in '08 certainly was going to rally. I mean, again, I've always said this in the beginning, that I don't care who you put in the office of president in 2008, that market was going to rally, all right? So it happened to be President Obama, and of course, the left is still saying that he's responsible for the rally. I go, okay, doesn't matter to me. And I also said, whoever you put in 2016 or 2017, which is the year of office, the markets were going to have a big sell-off. Now, of course, for the first year of President Trump, the markets have done nothing but straight up. Now, a lot of that has to do with some of the policies that were set by the Fed, which were the cheap money to continue, which was stupid. The overall lack of, the taking away of regulations, which was smart. So that perpetuated a big rally. So for Trump's first year, he had a monster rally in office. Now, we would look at that more as a blow-off top to the upside, and now we would say that there would be more reason to believe that the markets are going to sell off. Now, you'll hear everybody else say, but the earnings are so great. Oh, they're great. Let's drool over the earnings. Yes, the earnings are very good, but what is the basis of those earnings? Where did those earnings come from? Well, the first is many of the big earnings came from stock buybacks. Many of the earnings came from the ability to use cheap money. So again, I have nothing wrong with it. I'm a capitalist, I believe in it, and that's great. However, the big money, the big rallies, all right, and the big earnings beats are based on what? Most of them are based on cheap money. We're not having that overall growth model that you and I both want to see. Yeah, we've had a 3% and maybe a little bit higher since Trump has been in office, but is it really true growth, or is that still related to the cheaper money? So let's analyze that part of it. The cheap money has allowed companies to report better earnings. But what happens now that interest rates are rising rapidly, now that the Federal Reserve has lost control, which was totally expected, what is going to be the next wave? All right, well, the next wave is if interest rates start to rise, then all of a sudden those companies that everybody says are not overvalued, which I disagree. I think they're overvalued anyways. I think we're in a bubble anyways. But let's just say we're not. If you say that the PE ratio of XYZ company is 22 based on 1 to 2 to 3% interest rates, and we go to 3, 4 to 5 to 6% interest rates, then what is going to happen to the earnings of XYZ? They are going to be trashed. All right. Again, when you're basing it on a stupid metric, okay, that is based on a situation that cannot exist, you are going to see a big change. So I can listen to all the pundits, I can listen to everybody drool all over the markets and fall all over themselves, telling us how great everything is, and I can just simply look you in the eye and say, hey, that's great, but what's going to happen when the cost of money goes up? That's going to change it. You add into that, okay, they're talking about the cost of money. You've got all these student debt loans and all these auto loans that are outstanding, that are bigger than the housing bubble. All right? The debt today is bigger than the housing bubble. Add into that the debt that the government is now creating. All right, for this, again, I wish that Trump would have shut the government down. I'm disappointed once again. So on the two key metrics that I was worried about, the tax plan, okay, which I think he should have gone for more, he had to give in for the victory. Now, with this continuing resolution or with the new budget and a new plan where they're adding more debt, I'm also disappointed. I would have rather he sat back and shut it down. In the old movie Shenandoah, burn those trains, okay? Unfortunately, it is politics, and he had to do what he had to do. I'm not a fan. I'm not happy about that either, because again, all we're doing is keeping a reason to keep the Fed around and to keep the lousy system that we're working and letting these politicians get away with murder, creating new bills and new things that really don't benefit you and me, the average guys in America, okay? You've got volatility that has come back to the markets in a big way. All right, and of course, it's great to have volatility. I have no problem with it. I think listen, as a trader, I love having volatility. You know, it's been great. It's been great trading. So I'm really happy about that. But again, one of the things I have said here many, many times is that these leveraged ETFs are crooked. These leveraged ETFs have a problem, and somebody's stealing the money, okay? And that is going to be part of my commentary when we get there later. So I will leave that and let you remember where I'm going when I come back from my commentary at the end of the show, okay? But so now we have a higher volatility, which means more movement, which means more understanding needs to be taken by the traders, especially those who trade options, because you have to be very careful now on how you're going to trade these, because you could get trapped and be overpaying for a lot of the options that you're buying right now. But I think when you look at the bigger picture, okay, the markets are in big trouble. All right, the debt system is in big trouble. All right, the central banks, the Fed and the central banks around the world are losing total control. They have bought gazillions of dollars worth of equities. They have bought tons of bonds. They have done everything they can to prop up the markets to make it look like we're seeing some actual real growth. I ask you, okay, are we? Now, I'm a big advocate. I think that the interest rate should have been risen or hiked years ago. If we were truly making the progress that everybody says we are, and the stock market is at record highs, up 300% from the bottom, why are we still at these ridiculously low rates? Why isn't the 10-year at 5% or 6%? Why don't the average investor or the average saver or the retirees who would much rather have their money in a bank getting 5 or 6% on a CD, why are they still being forced into the equity market? Those are a lot of questions, and that's a lot more of the manipulation. And I think that that's part of the bigger problem that we're seeing, is we allow them to continue to get away with this crap. And I think that is indeed the bigger story, because what do you think is going to happen now that interest rates have gotten away from the Federal Reserve. All right, this was extremely predictable. They are as clueless and as worthless as this on a bull, right? So think about it and think about what they've done, all right? So interest rates have gone straight up for the last 4, 5, 6, 7 weeks. But it started long before that, but now we're in that period where the bond futures keep dropping and interest rates are just going up. The 10-year is traded up as high as almost 290, closing the week at about 283. The 30 trade up is about 320, 325. Now it's closing at 305. Mortgage rates are up over 4.5%. So what do you think is going to happen? Now, the only reason that the markets haven't had this major meltdown yet is because they still believe that the markets are going to be able to, the Fed is going to be able to keep rates low. The first signal was the jobs number a couple of weeks ago, wage inflation, all of these things, which really, is anybody making more money than they were making 20 years ago? I think that's the bigger question. I don't care about wage inflation. I don't care what their stupid numbers tell me. Are we making more money today? And the answer is no. All right. We are not making more money today. We're making less money today than we were 20 years ago. The money doesn't go far enough as it should. So again, that's another reason to believe there's other problems. Okay. So now you've got the Fed trying to scramble and figure out what to do and having all their people out there talking and trying to talk up these stories. Poor Powell. He just got in there, he's getting slammed. But I'm going to give you a bigger reason of why this is going to collapse when I come back from the break with more of Bubba's Bottom Line. This is Bubba's Bottom Line. Todd Bubba Horwitz, and of course, we're going to step out of here for a break, but I want to remind you about highschoolinvesting.com. Now, wouldn't it be nicer to have our youth now educated and have a better understanding of the markets than the people we have in here now who have no understanding of how a market actually works? We teach a program, highschoolinvesting.com. We have been doing it for 7 years. I have paid the entire bill myself for 7 years. I have now run out of capital to continue to support this. And of course, it cost me thousands and thousands of dollars. I've got well over 6 figures into this as a donation. I'm not looking to get that money back. I understood it. I knew what I was trying to do. And now I'm running out of capital. And if you'd like to help out, all you have to do is go to patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. You can help me out. If you make a donation, I'm going to give you 1 free week of my advisory service and my commentary for any donation. It could be $5, it could be 10, it could be 1,000, whatever you want it to be. If you want to help out high school kids and you want to help out the education of America, then you help me out, and I will, in kind, help you back. That's patreon.com/Bubba Trading, and a big thank you goes out to all of you who have helped so far, which includes Wisconsin John, my securities attorney from Dallas, my friends from Switzerland, from China. All of you have really stepped up to help me, and of course that includes some of the others, and obviously I can't remember his name at the same time, but I do know who you are, and I do appreciate you. I thank you. And also don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. You know, we do a live radio show every day for you, and of course I'd like to always continue to help educate you. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. And before we went to break, I said to you, I'm going to tell you what's going on in the way that I think of it, and why I believe that these markets are going to collapse. And the thing is the driving factor right now of the ugliness of the market is really come down to the Fed is going to have to step away and raise rates, which is great. They should raise rates. Again, I want to know what happened to that free market economy anyways. But now, okay, their last bastion, their last hope to try to manipulate rates was the U.S. dollar, okay? So now that we look at the U.S. dollar, right, which was getting absolutely smoked and pummeled, okay? Now, if the dollar continued to go lower, then it would excuse some of the higher rates that were happening. Because if the dollar was going lower, for the bigger part of the lending or borrowing population outside of the United States of America, even though our rates are higher, because our dollar is weaker, they are still getting a discounted rate on borrowing money because they're using the euro currency, which is at a 25% discount and things like that. However, now the dollar is also getting away from the Fed and the central banks with all their currency wars and all their manipulation and all their BS. We are now seeing that the dollar's getting away from them, so interest rates are going up even faster. That will be, and that's what I believe will be the actual black swan. Over the years, we've had a number of black swans. In 2001, obviously, it was the tragedy of 9/11. In 2008, it was the housing bubble. In 2017, 18, 19, whatever it's going to be, I believe it's going to be the Federal Reserve. They will be known as the black swan as they continue to try to check their economics degrees at the door and figure out what the heck's going on somewhere, because they certainly have not done a very good job unless you believe in bailing out the banks who already print their own money. Why the banks were not held responsible for the housing bubble is beyond me. But again, that's above my pay grade. To me, it was one of the dumbest things ever to let them walk away scot-free, okay, and just let them get bigger so that they can create the same issue once again. That to me is a much bigger problem. And of course, I think we're starting to see this play out in many different areas. And if we look at, for example, we look at the gold markets. Gold, with the market in turmoil, gold has not rallied. In fact, gold has sold off. That should be a warning sign in your mind that there's something going on. The treasury bonds continue to get pummeled. All right, that's another warning sign. Oil has fallen off the face of the map, falling about 10 or 12%, because we said right here on Bubba's Bottom Line that oil was a BS rally and that it was in what they call a backwardation formation, which means there was some fear pushing the price of oil higher in the near term, but much slower still in the long term. So not a problem, not something that we should believe, which is what made oil an easy sale. Out of nowhere, all of a sudden, we now start to see a little rally in the grain markets. That's a good thing. We expected that. I think the grain markets will rally much harder as we see more selling in the equities. Now, of course, I look at what's going on, and it has nothing to do with the dollar. I know that we've always tried to equate the dollar to commodity prices, but that is not really the case anymore, because everybody has realized that the dollar is nothing more than another Ponzi scheme created by the Federal Reserve. It doesn't have as much meaning anymore because it's not being driven by a true free market. So when I look at the dollar and I look at the grains, I go, doesn't really matter. The dollar is at lows. All the commodities didn't rally anyway. So I think now you're going to start to see money come out of the equity markets and into the grain market, some of the agriculture, other agricultural space. The one concern here is soybeans. Soybeans are having a great deal of trouble trying to get over that 985 or actually collapse and stay behind it. So, but I think that looks okay. So I think that bonds, gold, oil, all in trouble, all going much lower. All right, I think that's part of it. I think equities are going to get. This is the start of the correction. Now, remember one thing about these corrections, all right? When they look bleakest, when they're just pounding them down, that's the time you should be looking for a potential spot to step in and become a buyer for a short-term trade. Now, this is for traders, not for investors. I'll get to investors in a minute. So you want to look for that vicious, rip-your-face-off rally when they're giving them away. And when they finally run it back up, remember those rallies look so good when they're going straight up. Like Friday's rally looked like it was unbelievable. And of course, I believe it's going to be a great selling opportunity. But investors should not do anything unless you should be hedged. But if you're not hedged, and I can't force you to do it, but if you should continue just to be invested and not watch some of these violent swings, because you'll be forced to make a poor emotional decision. I think that's something else. But I mean, now we have a deficit that continues to explode to the upside. Now, for years, I guess 100 years, whatever it's been, we have always passed that problem back down to the next generation. Well, the next generation, I don't believe, is going to be able to solve this problem. This debt is getting out of control. I think it needs to be solved now. I think it needs to be solved by a good old-fashioned meltdown in the markets and a good old-fashioned dumping the Federal Reserve, who prints all this money, and the deficit hawks need to come back in and not let some of these bills pass, because we've got to, at some point, you've got to take a stand. And I think this is that point. You're over 20 trillion in deficit. You're going to add another 2 or 3 or 4 trillion in the next couple of years. You've got to at some point say, enough, it's time, it's over. And I think this is that time. I don't think that we can handle another major meltdown. I don't think we can handle a lot of problems. Now, I'm a big believer in America. I think we will get it solved, but we have to clean up the swamp and get rid of the crap and get rid of the people like Pelosi who need an enema, and the people like Schumer that are only looking to take more government money. And again, there's plenty on the right that need to go too. The system needs to be revamped. That's really the bottom line, all right? But, you know, you've got right now, you've got a lot of brainless traders that are putting your retirement dollars at great risk. Many of you have advisors, many of you have brokers, and I hope that you take the time to stand and talk with your broker or your advisor and say, hey, what are you doing with my money? What's going on? And I don't mean a bad thing yet. Just, I'd like to know how you're handling it, all right? Because right now what you're seeing is one of the things that will make Darth Vader really come to life, and that is that brokers are pouring their money, your money, into the markets. Advisors are putting your money into the markets. Why? Because them, like many others, have no understanding of what's next to come, and that it's actually healthy for the markets to sell off. But the only way that they get paid is to have your money in the market. That's where they make their fees. If your money's in cash, they make no fees. So this is your buying opportunity of a lifetime. And I watch them on TV, and I watch them say, buy, 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 same as our buddy, and you know that other network, okay? That buy, 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 who has no accountability and no responsibility to anybody. So of course I can say buy, buy, buy. When you hear from me, I'm giving you exactly the way I look at it. I have no real determination of which way we're going to go. I believe this is the time for the correction. However, as I've always said before, I'm long equities. I'm not selling those. I'm hedging those. But I believe the markets will be up 10 years from now. Whenever the sell-off starts, the markets will be up 10 years from there, higher than they were before the sell-off started. When it's going to be, that I can't answer. But at the end of the day, I'm a stock market bull. The markets go up 8% year over year. So I'm not selling my stocks, but as a short-term trader, I'm going to sell like crazy. And I'm looking for a potential 30 to 40% hickey or haircut on this market. So my only words to you is to make sure you understand what your advisor, what your broker is doing for you, and make sure that they aren't just putting you in so they can make their commissions. That's it. Stay away from the pundits on TV that continue to cheerlead the markets up, okay, that are hoping against hope. Remember, there's an old diagram that shows how markets run and how the cycle works. And it goes, new money, smart money gets in, retail starts to come in, boom, we get the blow off to the upside. You get the first sell-off, the new paradigm, and then everybody's buy, 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 and it just doesn't quite make it back to the old, and then, whew, I don't know. That's what I'm expecting here in this next cycle. Now, it doesn't mean it's going to happen tomorrow. It takes time for these things to adjust. But again, for yourself, make sure you understand what your broker's doing for you. Again, I'm not saying they're bad people. I'm just saying make sure that they have your best interest at heart when you do it. This is Bubba's Bottom Line, and I am Todd Bubba Horwitz, and I'm going to step out here for a break, but I'll be back with my commentary right after this with more Bubba's Bottom Line. And of course, again, I want to remind you about highschoolinvesting.com. Check it out. You can check out the site. Looking for some help, want to make sure that we can continue to try to grow it. I have myself financed it for the last 7 years on my own. And of course, now I need a little bit of help. If anybody wants to step in, you go to patreon.com/Bubba Trading. And of course, if you do help out, you will get 1 free week of my advisory. And I will be happy to get you set up in that right away. And of course, don't forget to get the Bubba Show every single day at libertytalk.fm from 4 to 5 Eastern Time. And let's get back to the show. This is Bubba's Bottom Line, and I am Todd Bubba Horwitz, and it's time for my commentary, which I know you so much wait for every week. And of course, you know I've blasted the Fed a number of times, but this is the one thing that really irritates me. It's the one thing I have talked about endlessly for years, and that is, first of all, these leveraged products, especially these leveraged volatility products. And I often wonder, Okay, we have the regulators that we have don't ever come after the small guys over the big guys. They let the big guys do, and when they do go to J.P. Morgan, somebody said the other day that J.P. Morgan's shareholders got penalized for $5 billion that they made a bad trade on, and I say BS to that. The guy who got caught with the $5 billion loss probably made $50 billion before he lost the $5. Nobody really believes that was the first time he ever made that trade, okay? But now, all of a sudden, out of nowhere, we get all these leveraged ETF products, which I've said and I believe, and I'll say it right now, in my opinion, they are all crooked. In my opinion, somebody is stealing that money, and in my opinion, somebody's going to jail, okay? That's my opinion. Now, we had, I think it was Monday or Tuesday night of last week, one of the volatility products, the XIV, X-Ray India Victor, was like $100, collapsed overnight to $4. They went out of business. Now, how is that possible if it's a true straight ETF? That means that they ran out of money and the thing just collapsed. So anybody who owned that got murdered and lost almost 100% overnight. And this is not the only one. It happens all of the time. If you look at VXX, another volatility product, if you look at any of these triple leveraged, FAS, FAZ, does anybody know that the FAZ, which is the triple negative leverage in the banks, in 2008 was trading split adjusted at $161,000 a share. Today, it's trading $11 a share. Now that in itself is kind of understandable. I mean, the markets have gone up dramatically. But what about its counter opposite, which is FAS? Well, you would think that FAS would be $160,000 a share right now because the market's on them to go straight up. It's $80. So you tell me what happened to the $158,000 a share, all that money. You tell me how we can continue to watch this cash just disappear out of these leverage ETFs. This is one of the biggest con game schemes ever when you allow them to leverage up products that work not on the actual results, but work on what they call a multiplier. So as the stock goes up, if you've watched, for example, this week, the VXX, Victor, X-Ray. If you watch it this week, we've had similar action, but each day it's gone farther up. Why? Because it multiplies at a higher number. The problem is it's like the retail business. If it gets marked down 50%, it needs 100% rally to rally back up again. So these continue to fall into and lose value, very much like options. They have time decay, all right? And they continue to fall. So even when they do rally, they don't get that far. TZA is a perfect example. That's the triple leverage on the Russell. All right, it was 1150 when the week started. The markets got absolutely crippled, and it was 1250. So I'm telling you, these, in my opinion, these are crooked products. Somebody's going to go to jail for them because somebody is scamming all that money out of it. So if you're in them and you get screwed, you only have yourself to blame, because this is something that we can see. It's about as plain as the nose on our face that there's a problem when an ETF does not perform with the market, and then all of a sudden it goes out of business. And I'm telling you, there's more than one of these products out there. Look at anything that's over single. And why would you want to go to triple leverage of anything anyways, when you can just do the same, create the same triple leverage in the market yourself for less money and less risk? So my thoughts for today is these leveraged ETFs are BS. They are crooked. There is somebody underneath it, and I believe that somebody will go to jail, but not today. And this has been Bubba's Bottom Line. And as always, I thank you so much for being a part of the show, and thanks for watching. Have a great weekend. We'll see you back here tomorrow on Bubba's Daily Update. Let's see what the markets looks like tonight. Could be a wild evening. Have a great one, everybody. Thank you so much. We'll see you later.